Welcome back onto Corporate Conversations. Then Sai Life Sciences is the stock in focus. IIFL Securities recently initiated a buy rating with a price target of 825. Now the brokerage believes that return ratios will improve to mid to high teens over FY27 to 30. But how will Donald Trump's tariff war impact the CDMO space? We are now being joined by Krishna Kanumuri, who is the managing director and CEO of the company, to discuss the road ahead. Krishna, good afternoon. Thank you so much for joining in. I'd like to start off with what's happening in the US, right? There has been so much flip-flop over tariffs. Pharmaceuticals are also in the firing line. 2nd of April is that date. If there are tariffs that are imposed, what kind of impact do you see on your company? And if you could also tell us what's your exposure currently to the US?
Look, I think if you look at what's going on tariff, there are a lot of unknowns at this point, right? And as far as our conversation with customers go and so forth, I don't think people are thinking too much about tariffs. And also, if you look at the CDMO sector, we are primarily supporting innovators, and they generally tend to move much slower. I don't think they make any long-term decisions based on short-term pricing. And so at this point, our view is neutral. I don't think there's going to be a pro or con for the business. I think so far it's been business as usual. And at this point, we believe it's going to be business as usual going forward, irrespective of what happens with the tariffs. We don't see a material impact one way or the other.
Krishna, so you're saying that you don't see a material impact as of now, if and when tariffs, if they do come. Now, the second question is, there's a lot of interest in the entire CDMO space on account of the impending, US Biosecure Act. At this point of time, it appears as though the US Biosecure Act has been put on the back burner. But, a couple of sell-side analysts have pointed that the damage is probably already been done, and Indian pharma companies are likely to see much higher RFQs and probably converting that into long-term contracts. What is the on-ground scenario as of now? What is the number of RFPs or RFQs that you're working on, and how many of them have translated into full-scale projects?
Look, I think the analyst is correct. I think basically what Biosecure Act did, look, the whole global deleveraging started happening post-COVID, and the last 3-4 years, we've all have seen substantial increase in business. Sai in particular has benefited significantly from this trend based on our past growth rate of the last few years. This is based on a China Plus One strategy, and this momentum has really continued or accelerated last year based on the depth of relationships we're building with existing customers and new customers coming in. And if anything, we've seen an increase in momentum in the last few months from even what we saw in 2024. So long story short, I think Biosecure Act did its job. It probably accelerated the process of people basically relooking at the supply chains. Momentum continues from both number of customers coming to join Sai and visit us, as well as the depth of relationships and new RFPs from existing customers as well. So I think we are very bullish. And if anything, like I said, the trend has accelerated rather than declined in the last few months.
What are the inquiries that you're receiving for your CDMO operations from your clients? Because has there been an increase? What is the situation on the ground that you're currently witnessing?
It's been increasing. Like I said, it's been increasing. It's accelerating even this year compared to last year. So we're seeing a significant increase in terms of inquiries.
And do you expect that to sustain going forward as well?
Look, I think if you really look at it, India is there for next 5-10 year opportunity, right? I think we're just the early phase of this opportunity. And what you're seeing now in terms of inquiries is customers trying to figure out who their partners will be and who they expand with. So I think what you're seeing today is only a small fraction of the overall business opportunity. And I think you will see this real opportunity coming in the next 5-10 years. You will see good growth in the short run, but I think the real volume is a 5-10 year opportunity in front of us. There's significant capability and capacity building which is going to happen in the next few years.
Got that. Krishna, let's try and quantify the opportunity. Over the next 3 years, how can you grow the business? What is the anticipated CAGR in terms of top-line growth, EBITDA margins, as well as PAT? And also give us some sense in terms of the Schrödinger contract. We believe that is for the CRO space. So what is the duration or the tenure of that contract, and how does it impact your financials?
Look, from a standpoint of how to quantify it, we've already guided the market to 15-20% growth. The reality is this is a cyclical business. It's very hard for us to pick quarter to quarter. I think you're going to continue to see quarterly variations, even annual variations. But over a 3 to 5 year horizon, we are forecasting a 15-20% top line growth. Also, we're showing a margin increase. We're at about 24% margin. We are forecasting a margin increase to 20-30% EBITDA, which is going to basically imply that we'll have a faster growth rate in terms of our profitability vis-a-vis top line growth. And so I think top line is good and bottom line looks very healthy. And I think these figures are definitely achievable. And I think there's going to be significant capacity addition, which will probably play out for us in the next beyond 3 years, because it takes a couple of years to add new capacity. So those will play out over the longer period. As far as Schrödinger contract, I think it's a 5-year contract. It's been a very important contract for us in terms of demonstrating the market that we can build dedicated facilities, run fully integrated programs with discovery, development, and also biology. I think we are seeing several other relations also at this point, which are growing into significant scale. And I think this is just a blueprint for building larger collaboration for us on the discovery side. And we are seeing several collaborations moving in that direction.
You know, I was reading this brokerage report, which it says that you have 8 tech transfer projects, which could add up to around $25 to $30 million in your combined revenue in FY28. Is that a fair assumption to make, or do you see that number being slightly higher?
Look, I think I'll stick with that assumption, right? There's no point giving guidance beyond that.
All right, Krishna, thank you so much for sparing time, joining us today on the show. Wish you good luck for the road ahead as well. The management there of Sai Life Sciences confident that the Trump tariff tantrums may not have a significant impact on the business. The stock currently trading with gains of around 0.5%. And by the way, PB Fintech though continues to languish at the lowest point of the day, another 5.5% knocked off in today's trading session after yesterday's fall. So it's almost 8 to 9% gone in the last 2 trading sessions after the investment that it announced in its healthcare arm. We take a short break. More on the markets and specific stocks on the other side. Stay tuned.
Well, thanks so much for tuning in to CNBC TV 18. Make sure you follow us and stay updated on all our social media platforms.